Hello, everyone. This is your market update for November 21st, 2023. First, with the economic calendar, today at 2 p.m., we will get the Fed minutes from the last FOMC meeting. I feel that they kind of massage these minutes to reflect whatever they want the markets to perceive. So we'll just have to see what they come out as, but it could be dovish or hawkish depending on what they want the markets to think. Tomorrow, we will get initial claims, and they have been climbing a little bit. I'm going to jump over to them real quick. So back here in June, they peaked at 265,000. These are released every Thursday. And to my surprise, they came all the way back down to around 200,000 in October, so a little over a month ago. And they've begun to rise again. And last week, they were at 231,000. Really, if we're heading into recession, as I have been projecting here for some time, we need to take out this 265,000 weekly high. And I don't know when we're going to do that. I believe we will. And my guess is we'll see if this trend continues to accelerate higher, but we could take that out before the end of the year or early next year. And at that point, I think people will begin to realize the recession is real and it is here. Today, I want to talk about market concentration. So if you go to Yahoo Finance and you look up the S&P 500, the ETF that represents that, you'll see that 31.14% of total assets are in the top 10 companies. So the way I look at this is for every $100 that goes into SPY, $7.14 will go to Microsoft, $7.14 will go to Apple, and $3.44 will go to Amazon, and so on and so forth. And this just seems out of balance to me. So the bigger companies, they continue to expand, and the bigger they get, the more they receive. And that just doesn't seem appropriate to me. And in the QQQ is even worse. So this leans heavily towards tech, but the top 10 holdings here account for 49% of total assets. So for every $100 that goes into this, $11 goes to Apple, $10 goes to Microsoft, $5.67 goes to Amazon, and so on and so forth. They're not selecting companies based on market valuations. It's all based on size, and that's out of balance. And I know that this is going to end poorly at some point. I just don't know when. If we jump over to the charts, gold is, I think it just made a fresh high, so that's good. I'd like to see a close above 2,000 today would be wonderful. I don't know if we'll get it, but basically we're coming back to test this resistance level, and I do think we will probably attack the all-time highs around $2,090 within the next month or two. Over to silver. Silver reversed yesterday. It did make us a temporary swing high, but at the moment, it looks like we're making a bullish engulfing candle, reversing yesterday's down day. And again, we're contending with resistance around $24. Once we get above $24, we have several more resistance levels to contend with. But, the line in the sand here is the 3-year trend line. And I think if we can get above $26, prices could really start moving. Platinum is looking as nice as well. This was kind of an upward consolidation, and prices are breaking higher. $950 is the big level here we got to beat. We hit it here in October and again in September, and we couldn't get above that level. So I think we're going to get through it this time. Over to GDX. So prices did open lower and reversed and finished higher on the day, which was a nice to see. So I think we'll get a big jump today. Hopefully we'll close above $29. And we have a gap here from November 6th that was at, what was the close there? $29.15. So really we got to get a close above that gap to make an attack on $30. But once we get above $30, that will complete the head and shoulders bottom. And the initial target, I guess I'll show you how I do that. I wanted to do this the other day. So to get a head and shoulders target, you take the bottom of the head to the neckline, which is about there, and then you just add that. So in this case, it would be just around $35 roughly. Uh, and I see a huge gap here around $35. So we could come up to fill that gap before prices pull back. So that's after we have a confirmed breakout, which I suspect maybe in the next week or two we'll get above $30. But that's the initial target, and then we'll probably see a pullback. But overall, I think gold miners are dirt cheap, and if gold breaks out to new all-time highs, I think they're going to have a lot of catching up to do, and they could really, really move.